Everyone, how are you doing today? Oh, come on, you've got to be doing better than. How are you doing today? All right, very good. As I was introduced, I'm Carol Roth. I am the host of WGN's Noon Show. I'm also a contributor for CNBC and a recovering investment banker. So I've helped companies raise over $1 billion in my former life, so I know what you're going through. We have a fantastic panel today, but before we jump into the panel, I'd like to find out a little bit about you so that we can help tailor the questions. So just by show of hands, how many of you have taken on some type of capital for your business, whether it be a loan or equity, any sort of outside capital? How many of you, by show of hands? And how many of you are entirely self-funded? It's great. How many of you have no idea where you are, but you saw the coffee outside and wanted to get out of the rain? There's always a couple. Well, welcome to all of you. We have a fantastic panel here that was introduced previously, and this is meant to be fun and really to help you, help them, help you get access to capital. So we're going to have a little bit of a conversation here, and then we'll leave time for Q&A at the end. So I'm going to jump right into things, and I'm going to start all the way down on the end with Dave Micah from BMO Harris. Dave, I think that a lot of small businesses think that they need capital. In fact, almost every entrepreneur I've ever met thinks that they need capital, but aren't necessarily sure about when's the right time. So what's your criteria, if you can give some general parameters, when's a business ready to take on, say, a loan?
You know, it's an important question, and I think, to your point, every small business owner, and quite honestly, every banker out there thinks about that question. It's so critical. The spectrum is so huge, from those of you that are just starting out and thinking about starting that business, to quite honestly, small businesses can be long-term, as you know, can be long-term, long-existent entities out there. So it really depends where in the life cycle they are. And so early on, if you're really at the beginning stages of starting a business, you really have to work with hopefully a team of professionals, with your banker, your attorney, your lawyer, developing that business plan and really leveraging that to really look at what are your capital needs and helping use those partners to determine what that starting capital might be and how can you fund it from your own resources or from potential equity or from potential lending. So that's an early on. Once you're in business, the question really boils down to, do you need that capital to continue the growth of your business the way you are? And that really is when you see that you're actually putting money in your pocket at the end of the year, you're growing your customer base, and what's limiting your ability to succeed even more is the fact that you don't have that capital. That's the perfect time to really make sure you're engaged with a relationship with a bank or a lender or some type of partner out there that can help you in that way.
Sak, we got a chance to see a little bit about your business. This is Sak Nadeem from Paradise for Pause. When was the right time for you? How did you know when was the right time to take an outside capital?
Sure. So the biggest thing, honestly, for me was, so I had a full-time job before I was trying to figure out if I wanted to start my business. So there were a few different key steps that I had set for myself, saying that, hey, if I meet A, B, and C, that's when I'm ready to actually quit my job and
so what were A, B, and C? Because we want to get down and dirty into the details here. So what were the A, B, and C for you?
So interestingly enough, the panel that we had today, my A was actually having the debt lined up. So as an example, I needed about $1 million to start my business at that point, and I wanted to do about $500,000 in equity based on the financial analysis and the advisors like Dave had mentioned. I'd analyzed to say, hey, you know what, I need about 50% in equity and about 50% in debt. However, I started my business back in 2008, so you have to also think about the economic environment at that time as well, right? So access to capital, I wish I had something like this where I had a lot of people kind of helping me out, but so what I was trying to figure out, hey, if I need about $500,000 in debt, and at that time, everything was about, hey, debt is extremely hard to come by. So that was like my number A to say, hey, can I get about $500,000 in debt? So that was A, and then as part of that, in tandem, I was working with some of my equity partners as well to say, hey, I started getting conditional equity investment offers from them saying that, hey, if I can get my debt squared away, they'll give me the additional $500,000 in equity. So those were the big things. In October of 2007, my SBA loan got approved, so I was very, very excited and fortunate. And because of that, my investors ended up saying, okay, you know what, we're going to give you the money as well, and ended up quitting my job and actually starting that business.
All right, so a very thoughtful, methodical process is my takeaway from that.
Yeah.
I want to go to Dottie Overall from the SBA Chicago. I think that there's always a struggle for a lot of entrepreneurs. Sock obviously extremely confident, willing to take some risks. Folks like myself not necessarily loving to take the risk so much, and there's always that pull, when do I bootstrap versus when do I take on capital? Even if I can get the capital, should I take it? What do you say to that, Dottie?
Especially in the case of a startup business or the acquisition of an existing business, the first thing you want to do is a feasibility study. For example, a retail store, how many retail stores like that store are in the area? And that statistical data is available to you through the Illinois Department of Commerce, through some of the SBA resource partners. Put that on paper, play with it, talk to a professional, run those ideas by others, because what you think might be a great idea, Carol, somebody will say, that is really not a good idea.
And Dottie, and if I can just jump in there,
sure.
You know, it's almost like sometimes you're in this honeymoon phase and you get so excited and you want to jump in and you know, you want to get married and just go right to Vegas without spending the time dating first. And it sounds like you're really advocating getting to know the person, going on some dates, and doing all those things before you go right to the wedding.
That's not when you want to do speed dating. Yeah, you really want to analyze the situation, especially in the case of a startup. And again, as I mentioned, there's some great resources out there available to you. But the classic example is a restaurant. How many times have you heard somebody gets laid off from their job, they get a severance package, and they come to SBA and they say, I want to start a restaurant. And I say, okay, have you ever worked in a restaurant? No, but I make really good barbecue. So we would step back and say, okay, you probably need to get some restaurant experience before you visit with your banker. I'm not sure that they would be receptive. So these are the things that we talk about at SBA. We do classes, we do individual one-on-one counseling through our resource partners. And 1 year out is probably a good amount of time to get started.
So it really takes that long to do the preparation, to get all of your ducks in a row, to have A, B, and C covered, as Sock said. I think that that's really strong advice. I want to move along to the application process, because once you've done the research, then you say, okay, I'm ready and raring to go. Now what? Now what do I do? So Jennifer, let me come to you, because I think a small business owner can sometimes be his or her own worst enemy in terms of not knowing what to do and not doing the right preparation, even if they've prepared up until that point. So what do you suggest in terms of the application process? What are some of the pitfalls to avoid and things to make sure that you do?
To begin with, you should have a relationship with a bank. So it starts with that relationship and building upon that relationship. So you're going to have an operating account somewhere, you're going to gain experience with a bank. So it starts there, understanding that that dynamic is important. The bank knows you, they understand your business, what you're doing, and where you're headed. I think one of the key things and one of the challenges for the business owner is understanding that cash flow is very important to your business. So how do you demonstrate the cash flow the revenues that you have, your cash flow, and then how does your customer base break down? So you need to understand, who are my customers, where may I have some concentration risk in terms of the composition of my customers. So are 80% of your customers contributing, are your top 3 customers 80% of your profit? So how are you diversifying? How are you growing your revenue? And then really understanding your cash flow dynamics is very important to the bank, essential to being approved for credit. So you really want to understand your financial dynamics and get organized around that. And partner, as Dave said, your accountant, your attorney, your banker, those are your partners, your power partners. So consult with your accountant. Understand what your direction is. As Zach said, how much credit do I need? What's my composition of credit and equity? Consult with your accountant, bring your banker in, and then be ready to tell your story. Be organized around who you are, your experience levels, where you've been, and where you plan to go. But cash flow is very important in your ability to understand your financials.
I think there's a lot of good information there. We'll get deep into all of those, but I want to go to Tom Huffman from Wintrust. What do you think are some of the other pitfalls in terms of preparing for the application process and going through it from a small business's perspective?
I think, as she was saying, being organized. I think many of people, I know I have a 6th grade son who's disorganized. He's got his files everywhere. And if that's the kind of person that shows up at your desk at the application process, probably doesn't happen. That's number one. The other thing is understand cash flow and what does that mean and what is a bank looking for. Every bank kind of looks for things differently, but all the banks look for cash flow. So you need to first and foremost understand what cash flow means. The other major issue is a bank asks for 10 pieces of paper. The tax return or a business plan or a list of expenditures or a list of your customers, and they're not asking for 9 of them, they're asking for 10. Give them the 10. And the way these banks work is that there's a guy in the back sitting there at his desk and says, I'm not starting on this until I get all 10 things. I mean, right, guys? Am I lying? So from that standpoint, get the 10 things.
And Tom, I will have to stick up for how many of you are incredibly disorganized, because my office looks like somebody went through it and everything's all over the place. So I feel your pain on that one, but I think there's a way to have that disorganization in the space and then still walk in with that polished persona.
Correct.
Yeah, Dave, did you have a comment on that?
Yeah, and I would say this, and I think we probably would all agree that if you look at the small business segment out there and what you all represent, it is an enormous marketplace. There are millions of people like yourselves who are really trying to either start or really grow their business. And I think we've recognized that this is a space we need to be better prepared for, and we need to deliver a better level of service to small business. And I think we'd all say we've simplified our lending processes. You still need 10 pieces of paper, but it's a heck of a lot simpler than it used to be. I think even with the SBA and our partnership with the SBA, we've made it even simpler. So you shouldn't be afraid or scared of the process. There's absolutely no reason to be. The only way we can be successful as lenders, quite honestly, is if we help you be successful. And we need all of you. We need to talk to you. That's where today, in DNB's event today, is absolutely terrific, because it gives us that chance to hopefully take down that veil of, oh my God, I'm not sure I'm ready for a bank yet, or any lender, and really come talk to us, because we can help.
Right, and I think the key is just make it easy for them to do their jobs, and that gets you a really good part of the way there. So if you do have 10 things that you're asked for, put it all in one email, put the little checklist, I've included this. I've got to imagine that would impress you. Jay, am I right? With somebody who's completely organized, has everything in one email and said, I've gone through, here are all the items, that level of organization, does that get your attention?
It gets our attention, sure. And I would say also, to begin, early on in the process, to start talking with bankers and be ahead of that. One thing in terms of, being disorganized and also, being in a hurry. If you're coming in, frantically desperate to have a loan approved and get cash, that's going to be, you're putting yourself in a difficult position as well. So I would say early on in the process, start talking with bankers so that you've got a good fit and you'll be in good shape.
All right, so I'm hearing the theme about relationships, and relationships, you all know how critically important they are in business, and with lending, it's no different, and Jennifer, you brought that up. So if I don't know any bankers, how do I begin to cultivate these relationships? Is there a special bar that you all hang out at?
We're not allowed to divulge that.
Oh, this is the Access to Capital event. We need to know that information.
That's our top secret. No, actually, it probably starts with your banking center, right? So you go into a branch, you've met a banker, you have your personal accounts somewhere. Hopefully you also have your business accounts there as well. So it starts really with your branch typically. And when you're starting your company, it typically starts that you're starting borrowing from family and friends. So the next level of credit, maybe you're getting a business credit card, then you're moving into your line of credit. Then maybe you're growing and you're outgrowing your facility, and now you're moving from a rented unit to I'm ready to buy a building. So it typically starts, as you all know, with your branch. Where am I doing my personal banking? If I have a banker there, they're going to know who their business banker is, and they're going to be able to make that introduction. Lenders were all at events all the time. So as you're out there networking, you're going to meet bankers. Bankers usually outnumber the room. So when you talk about a bar and you go to an event, bankers are going to outweigh everybody. So you could turn any corner, you're going to find a banker, because we're everywhere. We're popping out of manholes. So you're going to probably be able to find a banker, but if you can't, it always starts with, where do I do my personal banking? And then where did I open my business account? It's probably going to start with your branch.
And finding the right fit, right?
Exactly.
I mean, it's really about cultivating that
Personality, exactly.
personality fit, and it's not necessarily the first person you meet and say, oh,
Right.
well, you're a banker, so I'm going
Right.
to talk to you and this is going to work. You should take the time to get to know different people.
Your
and see where
accountant
you have
may
that.
make recommendations on which bank they've had their customers working with or who they might recommend. So remember, you have people around you. If you ask the questions, they're willing to answer. Everyone's ready to give some advice. So don't be afraid to ask a lot of questions, ask a lot of people. Ask other business owners. They're willing to help you too. So there's a lot of people out there that are ready to help you.
And Jay, and you say that to start that before you need it, to the extent possible, as early on in the process, start cultivating that relationship so by the time you're ready to ask for the loan, you guys already know each other.
Exactly, and I think you want that good fit. So you talk with several bankers, and while you're applying for credit, applying for a loan, you're also interviewing your banker and your bank to make sure that it's a good fit. So you can ask those questions in terms of, do you lend in the industry that I'm in, or are you familiar with this type of industry in this area, and make sure that your banker is accessible and communicative and is the right fit for you.
And gives you plenty of time to send some cookie baskets over in the interim, right?
That's right.
Sock, what was your experience? How did you get to cultivate that relationship to make it work for you?
Yeah, so a lot of these, like the points that you guys made, actually those were exactly the things that I followed. But I wanted to talk about actually two things related to that. My actually first lender was at not a similar event, but more like an expo kind of thing, where I actually met my first lender. I went up to the booth, started talking to that lender, so kind of like a lot of that setup that's here, and started talking to them about, hey, this is what I'm trying to do. What is your lending appetite? What kind of industries do you guys lend in? Even though I did not have any relationship with that banker at that point, that was the start of that relationship. So when we talk about building that relationship, there's a lot of different opportunities. Like of course going to the bank is also an opportunity, but these kind of events, that's your first step, is meeting all the bankers that are here, getting to know them. Because I personally, from a business owner perspective, can't stress enough that it's a two-way street. Yes, they are lending you the money, but you have to work with, you have put your sweat, or you're going to put your sweat, tears, and blood into this, right? So it has to be a two-way street. You have to be able to work with them, and this is your opportunity to kind of interview them as much as they're going to interview you through this process as well. So that was one part. Then the other thing is, honestly, no matter if you're a small business owner or if you've been in the industry for a long time, don't underestimate the power of your network. And that network means, like you were mentioning, it could be your neighbor or it could be your accountant. But I remember when I was starting up, as a small business owner, you don't have a bigwig attorney initially. You don't have a big accountant that can refer you to a lot of places. But even if you have a smaller accountant or any of your friends who work in that industry, feel free to approach them and saying that, hey, I'm going to be looking for lending or I'm going to be looking for capital. Have you worked with anybody? Don't underestimate that. Talk to as many people as you can to find that right fit, really.
Yeah, I think that's a great point. And Dave, I think that does become an issue because there are all these great ideas. I want to have the accountant and the lawyer and the banker team. And I don't know anyone. Everybody I know, has a regular job and is doing their thing. So is it just really putting the word out, or what's your best advice for that?
There are an amazing number of resources out there that are available at minimal cost that can really help organize that way. I think the SBA and some of the small business development centers that are out there, people that partner with the SBA, offer classes, offer networking sessions out there, can really steer you to professionals who cater specifically to new businesses or small businesses that have been around for a while that want to grow. So there are those resources. Don't overlook your local Chamber of Commerce's. Almost all of them have annual expos where they bring local businesses together, as well as local professionals like ourselves and our local market teams there. So just building those right at your community level, there are plenty of resources. You don't have to go through the phone book and, 5,000 attorneys or 6,000 banks. You really can make those connections right locally in your own community.
And Dottie, do you want to speak to how the SBA gets involved in that sort of process?
Yes, we have resource partners throughout the state that are funded by the SBA and the state of Illinois. We have 36 centers strategically located. They're called Small Business Development Centers. We also have 13 SCORE chapters, and SCORE is a group of individuals who volunteer their time to provide one-on-one counseling. And my guess is you will probably find somebody that's been in your industry that you can just sit down and talk to. And then again, the classes. And all of our counseling services are free. They are your tax dollars, so I say use them.
There you go. I'm not going to touch that one with a 10-foot pole. Jennifer, I want to talk to you a little bit about one of the biggest questions that I'm hearing, and it's around things like personal financial statements, credit scores, and personal guarantees. Can you give some clarity around what to expect from that standpoint?
Sure. When you first go in and we talk about cash flow, that's typically your primary source of repayment for your loan. There's also a secondary source of repayment, and that will evolve around your personal financial statement and your personal guarantee. So the bank wants to make sure that if the cash flow from operations should deteriorate or something should be off for a particular year, that there's always a backup plan, so to speak, or a secondary source. And so they're looking to your personal guarantee. Your personal financial strength is very important, how you maintain your personal credit score. That personal credit score is part of the initial process of getting approved for credit. So you want to make sure that you're aware of your credit score. I think there's a seminar maybe later today or panel discussion around credit. So you really want to understand, what does my credit look like? How am I maintaining my credit? Keeping your unsecured debt to a minimum, the inquiries on your credit bureau very minimal, and then building your personal financial statement. Every lender on here is going to ask for your personal financial statement. So what are my assets? What are my liabilities, and what is my net worth, and building that. So oftentimes we'll see business owners who are starting up their company, and that's a lot of capital that you're putting into that business. So maintaining your personal credit score is really your personal report card on how you manage your credit. So the bank is going to look to that to see what is the character around how you maintain credit. So it's vitally important that you understand your credit and that you're building out your personal financial statement, so you're telling your story around your character and how you maintain your credit obligations.
And Tom, if you can go in a little bit further on the why, because I know that it's important to you, but I think the small business owners sometimes feel like, I don't understand why you need to have this personal guarantee. I don't understand why you need to look at my personal information. Can you communicate why that's so critical from your perspective?
Kind of a couple of factors. Number one, you have the corporate checkbook, and you can write yourself a check for anything. We just had a customer yesterday that made a bunch of money, made $1 million in 2011. He took it all out of his business, and then his business had a bad year, and now he needs to put back $250, and he doesn't have it. And well, he shouldn't have taken $1 million out, because he was living on $200,000 just fine for 5, 6, 7 years. So that's number one, is we don't have your checkbook, the corporate checkbook, you do. That's number one. The other thing is, I think there's a misunderstanding of the bank's margins. We lend out $1 and we make 1 penny. That's our general profit margin after our expenses. So we can't make a lot of we lend out $1, we get 1 penny. So we make 1%. So we can have very few mistakes, and therefore we would call it belt and suspenders. We're looking for cash flow, we're looking for collateral, we're looking for personal guarantees. But overall, we're looking at the personal guarantee because it's your passion, and you have the corporate checkbook as kind of the two things I kind of tell people.
David, in addition to perhaps putting up a personal guarantee, what are some other terms that a small business might expect to see if they were to get a loan?
I would say, as you look at it, ultimately the small business is you. It's one of the biggest things we as I think lenders are, is you cannot separate the passion, the expertise, the experience that you as small business owners bring to your business. So for us to say, but we're only lending to the business, the reality is we're lending to you. And it is very much, you will only be successful as long as the business owner's there. We want to make sure you're tied to it. That's really where the personal guarantee, I think, continues to add value for us, because we want you there. We're not the experts at the business, you are, and we want it to be successful. So we need you to be there and be successful and be committed to it. The types of terms I think you really can look for, or things that are out there. I mean, again, it depends on where your business is at. Early on, if you're really looking to generate the capital you need to do some research, to start up your company, to do that kind of thing, I think it gets back to Sach's point around equity. I mean, that's really, we're investing in this business because we hope it's going to grow and pay us back as owners. And we're not going to make 1%. We're going to make hopefully 100% or 1,000% or even more, because this business grows and provides us those resources. As a lender, we're not even hoping to participate in that. What we want to finance is, we want to help you manage your cash flow. We want to help you buy the capital equipment or the building that's going to allow you to run your business from that perspective. And so when it comes to terms for those, there really are you can expect things that we've talked a lot about cash flow. So it's a relationship and a ratio between how much cash flow, profitability, and other items that you generate every year versus how much can you afford to pay us in debt and monthly debt service or annual debt service. And so you can really expect that we're going to look for a ratio, and generally speaking, this is just a very general, you ought to have 125% of what your annual payments are for debt. You ought to have at least 125% of that in terms of how much profit and depreciation and cash flow you generate every year. Really, at a minimum, is probably the nice target you ought to be thinking about. A lot of times you don't have that cash that you can bring to the business, but guess what? You've been a professional in the field, you've been experienced in the industry, you've been out there for a while. That's why you can be successful as a small business owner, and you might own a home, and you've owned it, and you've built your equity in there, and rather than trying to sell your house and generating cash for the business that way, I mean, those types of assets bring value. You bring something outside of the business in, we can help you structure loans and turn that asset that you've worked so hard to build in your own life into that investment in your company. And so, leveraging that kind of outside collateral can be very important. And outside income. For a lot of people, while you're starting up, you may not be in a position where Sach pointed out, where he made the leap. He quit his job to go start this. And in a lot of businesses, you have to. But there are times where you might be able to keep your job and keep that outside income. So it gives us as lenders a safety net, knowing that you're not reliant on this startup business to make your mortgage payment, to buy food for your family, that you really do have this outside income that can really help support you while you are in fact starting this business. So I hope I answered the question.
Yeah, no, I think that's a great answer. I'd just like to go down the line and get your one takeaway from the panel. What's the one piece of advice that you would like to leave everybody with in terms of how to make sure they're as successful as possible when trying to access capital, especially getting a loan? Jennifer?
I think, as Zach mentioned, your business plan and making sure you understand, what it is that you're trying to accomplish. And then maybe go down a checklist for yourself of, okay, if I were to describe my background, like Daddy said, what am I, where did I come from? Why am I going to be successful in this business? Understand where you're headed, where your revenues are coming from and your cash flow, so you can tell your story and then get organized around it. So just take some time to sit down and write that out so that you're prepared to tell that story, so the banker can tell that story to the bank and they can get you more efficiently and quickly approved. So being organized is probably the number one thing I would say, and then understanding the dynamics of your business and being able to tell that story.
All right, well, that's two, but we'll since it's such good information, we'll let you sheen on that one, Jennifer.
Thank you.
Zach, go ahead.
I personally think, again, being a small business owner and always thinking about how much money I have and how much money I can spend is really digging deep into it to see how much capital do you really need, right? And covering your bases. That, hey, how much equity do you need? How much debt do you need? Can you cover your debt payments? First, you have to understand it before you can communicate to any of the bankers, right? This is how I'm going to cover these debt payments. This is what I can bear, right? So you have got to know that. And you got to figure that out, whether you talk to other people, you talk to other resources, to the SBA resources, try to figure that part of it out, to really figure out, hey, how much money you're going to bring in on your own, how much debt you're going to get, and how much external equity you can potentially get.
Jay, real quickly.
Sure. I would reiterate the importance of knowing your personal credit score, your credit report. Before you start talking with lenders, pull a copy of your credit report, make sure that it's accurate, and if there's anything on there that that needs to be addressed, do that early on.
All right. Perfect. And that is our time. Thank you so much, everybody. I wish you a lot of success for the rest of the day. And a big round of applause to our fabulous panel. Thank you very much.